Two Bulls in a China Shop is brought to you in part by our sponsors and friends over at Manscaped, Trade Pro Academy, and Vanta Trading. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, and with a new and improved 2.0 version of the Weed Whacker now available, it's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. And when it comes to institutional quality trading education, look no further than tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for anyone trading futures, check out vantatrading.com. Founded by Mr. W. Banks and BabaYaga, they provide a ton of educational content with the focus of teaching aspiring traders how to build a repeatable, profitable process. Our exclusive discount code for Vanta can also be found in our free Discord server. We'll have all of those links and more in the episode description. Thank you for listening, and I hope you enjoyed today's conversation.
With Vroom, you can shop thousands of cars right from your phone and have your next ride delivered straight to you. Between work, family, and making time for yourself, purchasing a new car can feel like an impossible task. Vroom gives you the flexibility needed to check their wide selection of vehicles and leisurely make your purchase. You'll also never have to negotiate the price of a car, so you know you're getting a good deal. After purchasing your vehicle with Vroom, you'll have a full week, or 250 miles, whichever comes first, to ensure your new ride is right for you. Plus, all cars on Vroom.com come with a 90-day limited warranty and 1 year of nationwide roadside assistance, giving you peace of mind while on the road. You can buy a car from Vroom entirely online. So next time you need to buy a car, just grab your phone, go to Vroom.com, and check out thousands of cars.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello everybody, and welcome to the China Shop. Today we are going back to the futures, that is, for a much anticipated Delta episode where Baba Yaga from Vanta Trading is going to break down what Delta is, why it's important, and how we can incorporate it into our own trading. So, Baba, do you think we can do all this in an hour and still have time to answer questions at the end?
I don't know, but we're gonna give it a shot and see just how far we can get.
I am anticipating a two-parter, but we'll see.
I'm okay with the two-parter. Also, I started a 1 hour countdown on one of my screens just to be mindful of time.
Oh, there's on the recording window, it's on there too.
Well, that would be, is what it is.
Maybe should probably stop wasting time then, huh?
Yeah, let's get into it, dude.
All right, well, first, though, you got anything new going on at Vanta that you want to promote before we jump into the meat of this?
What's going on? Yeah, so I like the way you say it better than I do. First of all, you say Vanta, it sounds really nice. And I say Vanta, like I just crawled out from under a rock.
You say it like you're from the South. I say it like I'm from south of the border.
Yeah. Well, we realized that a 3-day trial was not really fair to an end user, because if you joined the 3-day trial on a Friday, Saturday and Sunday counted towards a free trial, and there was no way to adjust for weekends. So the most recent thing we've done with that is change to a 7-day free trial. So I think that's pretty cool, because that gives, no matter when someone joins, that gives them 5 weekday trading sessions with us. And also, then that's 5 morning preps, that's 5 trading the opens, and then that's an opportunity to interact with the community, ask questions, kind of get a chance to learn a little bit about what we do. So
I like that.
That's been cool. We've had a lot of people spend trials with us, a fair amount of people stay around, which is cool. But yeah, I mean, we're just grinding, dude. We're trading, doing plans and trading the open every day.
Putting out lots of content too.
Yeah, we're trying to. One of the places we're trying to grow, while we're smaller, I would say we're reaching out to members and trying to learn what do they use to approach the market every day, what differentiates their approach from, say, my approach or Bank's approach, and then where are areas that they feel ill-equipped or just like they could be better equipped. And then Banks and I are trying to put our heads together to either put out content if we think that's broadly applicable, or offer, for obviously for no charge, but just like, hey, let's jump on a call on a Tuesday evening when the kids are in bed and screen share and talk through whatever is, giving you a difficult time or whatever. I mean, because I think know me well enough. Like, we really, really, really want to see our traders succeed and learn, learn the things they need to learn to be successful. And that's in large part, that's going to be wrapped around a consistent approach every day the same way, and then honoring your work enough to execute inside the bounds of that work. And so I actually had an hour phone call today with a new trader, and then I had lunch with a guy that actually lives local to me, who's a trader.
Oh, that's awesome.
Just talking through process and trying to help them figure it out.
I love it, man. All right. Well, where do you want to start then here?
Well, I think we should probably start at the very beginning. So, what is Delta? I think let's talk in the observing space for a minute. So, we talked about a couple ways to frame this up. So we talked about what, why, and where, and we also talked about observing Delta as a tool, and then we talked about interpreting that tool, what can we infer from it, and then how do we apply it. And I would love to get to apply if we can, because I think the apply becomes really easy though if you learn to observe and interpret well what Delta's doing. So quite simply put, most people are probably familiar with Delta from options contracts, and in some ways there's a similar relationship in the futures market as Delta has to an options contract.
Oh, okay.
So with an options contract, or at least the way I think about it. So with an options contract, you guys know with your options plays in, and then some of the guests, like the guy you have on Wednesdays, talks a ton about options and the deltas and staying neutral and all that.
Eric, yeah.
And so, super cool guy. So when you look at delta in options, it's how much will the options contract move up or down if the security moves, say, at like $1.
Right. So if it's like a 30 delta, then a $1 move in the underlying should equate to a 30-cent move in the contract, right?
That's correct. Yeah.
Okay. Whew.
Yeah, that's correct. And so, you nailed it. And so that to me tells the story of exposure. And I think that's why when Eric is talking about his plays on earnings and the way that he is anticipating, at least in some of his setups, he's anticipating an overestimation of volatility, and he's trying to stay very delta neutral to capture that that inefficiency.
Right.
And so he's trying to stay, not exposed to those moves and just capture that, the overestimation of the volatility. And so when you think about delta as it relates to futures, and we'll talk about how delta is made, but if you have a lot of delta in a given area, whether that delta is if you derive, if you come to the idea that there's a lot of delta there, if you're looking at a delta profile, like a volume profile, so delta by price, or if you're looking at candles that are painting based on a certain delta threshold, or if you're looking at any other litany of those things, what it can tell you is the exposure that a trader or the market in general has to fluctuations in price from that point forward. So if you have a ton of negative delta in an area, then the people that created that negative delta, either individual person or people, they are now exposed. And then that kind of loads the market with potential, because most people have stop losses, and most people don't want to take a ton of drawdown.
Right.
And so there's exposure and potential whenever delta is present. Now, it's not quite as correlated as an options contract. There's a little more nuance with like applying it, but that general idea is what sucked me in to really making delta like a key part of how I approach things.
Okay, I'm not sure I fully grasp what you're saying there, because I'm thinking of delta as it relates to futures is just the difference between market bids and market sells.
Yes.
Basically, like it's an indicator of who is the aggressor
Right.
at any given point.
Yeah.
So how does that equate to exposure then in that case?
Yeah. No, that's a good question. So, and again, this is some like inferring on my part, which we have to do with any tool. And before I go any further, let me just say that delta is in no way magic.
Yeah.
It in no way is the one thing you should watch. Like it's just a part of the story that it's a paragraph or it's a page of the overall story. You know, it's part of it, but it's not the whole thing. So if you think for a second about what makes delta, and what you mentioned it, right? It's the volume trading at the ask price minus the volume trading at the bid price. Bid minus ask equals delta, right? It's either positive or negative, and that is the thing. So when you think about, let's just pretend like it's you, or like this is the way I think about it. It's me and my ideas against the chart and what I'm seeing. Okay, so I'm assuming that everything that happens on the chart is one other person, and then it's me, right?
Okay.
That's the way I think about it. And so if I see on the chart, for instance, like we could actually use a real life trade example to kind of answer this question, and it was from today, and it'll make me look great, so that's always good.
Oh.
So so today we had I had 3 places where well, let's focus on the best one. There was a couple places I took longs today, and ultimately the long that ended up being the one that I rode till late in the afternoon came from this type of delta setup. So if you are tracking delta on a candle per candle basis, which we can talk in a little bit about how you do that, we had greater than 300 negative delta that was produced in a candle that pushed a new low from 13,374 down to 13,368.
For anybody following along or wanting to look up, this is from Thursday the 11th that we're recording
Thursday the 11th,
and NQ.
And that candle happened at 10:33 and 30 seconds a.m. if you're looking at a 512 trade chart. If we want to get real specific.
I'm going to write it down so I can.
It happened at 10:33:30 on Thursday, the 11th of May.
I'll see if I can grab a screenshot of it.
Well, here's what I'll do. I'll just you can grab one. I can send you one after this too.
Yeah, that's fine.
But yeah, so that candle that came in from 375 down to, or 374, 375 down to 368, that created greater than 300 negative delta. Now, some of this is just from my work and watching the market, but if in 512 trades we have greater than 300 delta, either way, positive or negative,
it's more than half the trades.
That's more than half the trades. That shows like somebody stepping on the gas pedal, right? So again, back to our analogy, I am watching 13,370 because from the TPO work that I do every day, 13,370 is kind of the top of a distribution, and if we get accepted back inside of 370, then that creates a different scenario. But until we do that, I was leaning towards finding a long to buy, which is a little different for me because we're below the OR, but that strategy is another conversation for another day.
Yeah.
But wanted to buy 370 or something really close to 370 if there was an opportunity that presented itself when we got there. Well, when we got there, sellers slammed the gas pedal. They made a new low on extremely high negative delta relative to what we what was happening in the candles preceding that. And then we peaked from the low of that candle. We went from, so that low was 368. the only follow through that those sellers, again, so I'm pretending like that was one guy. That guy made that decision. He sold the heck out of that down to 368. He got 7 points of follow through. And then we got aggressive buyers step in. We had greater than 200 positive delta, I believe, or greater than 200 positive delta on the candle after the candle that made the low. And then we got followed up by another candle with greater than 200 positive delta.
Okay.
And then we pulled back one more time to like 61, and then we shot out like we were blown out of a cannon, and we went from 61 or 62 to 408. So we went 60 something points just in a straight line.
So using this as candle by candle, basically what you're seeing is, let's see if I can just recreate the narrative here.
Yep.
Somebody sold the low with size aggressively.
Yep.
He didn't get much follow through, and in fact the market immediately bid it back up. So he's now, like, if I'm making that trade, if I'm the one who throws some size down expecting to push through this level and I see that it doesn't move, I'm getting terrified.
Right. And so what I did is that showed me that there was interest in the area that I was wanting to take a trade.
Mm-hmm.
So I got long at 71 as we pushed back up off that low.
Yep.
And then I held that thing for the entire afternoon. I scaled out of it. The reason I was able to pull the trigger is because now not only do I have somebody who, again, if I'm thinking of it as one person, someone who's extremely exposed, right, because of the implications of delta, they market sold that, and that's the other thing. Like,
right,
what makes delta is market activity at market.
Yeah.
Now we can infer from how much the candle moves what the limit side presence was as that at market activity happened.
Mm-hmm.
So if we have a wide bar, high delta candle versus a smaller, and that's relative, right? Versus a smaller candle that makes a lot of delta, then you can infer, well, how thick was the bid, how thick was the offer, whatever.
So
you could also watch the
absorption.
Tape. But that candle,
right?
Yeah, that candle wasn't huge, but it wasn't tiny. What was that?
So that's like the concept of absorption. This guy's
that's exactly
trying to sell into this level, but someone's sitting there passively buying it up.
Mm-hmm. Or like in this scenario, and it was tricky, like there's some nuance to applying this, and that's the other thing. It's like if someone is listening and they get really excited about the idea of delta, like, oh my gosh, this is what I've been waiting for. It's probably not what you've been waiting for, first of all. And then second of all, you need to, like, I highly recommend that somebody just watch before incorporating any kind of new tool set ever, but especially something like this, because this is really, I mean, there's 30 times during the day where you'll have high delta that means nothing. So the location of that delta plays into how much credence I give to whether it's actionable or not. Because I'm trying to think, like, is this person, are they making the right choice down here?
Mm-hmm.
And like, it should they have to be working that hard to move price that far?
Right.
And in my opinion, coming into 70, the answer was no. Like, that was a stop run off of that. In my opinion, that was a stop run off of the early equal lows that we had from like a little chop zone that we created from 79 to 94. And so I just waited for us to get that peak below and then have a reason to get long, which again, I had a level at 70 that was important to me. And then I had tools confirming the activity in that area. And so it was, that's when delta is really helpful and plays to your side.
It's a confirming tool almost. Or
it's a confirming tool, and it
just gives context.
Well, it helps tell the story.
Yes.
It gives context and tells the story exactly. And so again, for clarity, we're talking about delta as it comes in on a candle by candle basis.
Mm-hmm.
And that's one way that I look at delta, and probably one of the main ways I look at delta. Definitely not the only one, but that's what delta is. So it's the difference in bid and ask, and then why we would use it, because it shows us exposure and potential. So I felt very confident. It's hard to say that you know anything in trading, but I felt very confident that with that level of exposure into the lows, into a key level for me that I'd identified prior to market, with that kind of exposure, we could see a move that finally moved the NQ outside of this fairly small range that we traded for the day. I was also on guard today for a balance day because we peaked out of this old area, this old distribution area, this prior balance area. And a lot of times, when we peak out like we did on Monday and Tuesday, we kind of get that balancy vibe. And then we had this news Wednesday and Thursday. We moved some. The biggest thing we accomplished is getting above 70, in my opinion. But then just because we cleared that, the market kind of digests those kind of clearing an old balance. And then, buyers and sellers are trying to decide where they're going to find value next. And is that value going to be just slightly above this? Are we going to have to explore price higher, or are we going to abandon this move and rotate back into the old distribution? And so with the news not really getting us really cooking either way, today was a day to be nimble a little bit because like on this trade, normally I would be looking for places to add on a trade like this because thinking like I might have just bought the low a day. And I have this nice setup on Delta that kind of confirmed what I was thinking. But like, again, you have to bring in all the other context. Like I didn't add to this trade at all. I just held it for a long time because of the nature of the day type that we'd created, because we'd already been below OR the whole time. So we know there's going to be a war when we come back through the OR, and that's clear. And then like we had a real tough time getting through and all of that stuff. But again, what Delta showed me and why I would lean on it is because it showed me that there was potential for somebody to have stops just above that we could run. And it's sometimes when the market gets that little squirt through off of stops, then it kind of gets confirmed with that continuation vibe. When again, when other things show, like we had a series of pretty aggressive market buys that didn't create a ton of delta, but they were sizable. They were 19 to 23. It was like a 19 lot market buy, or just one order that was that big. That came in once we got above 400. We had 3 of those, and so you kind of realize now that everyone smells blood in the water for the sellers, and so then you really want to lean in and let that trade work for you. And it all originated with this sequence of Delta being aggressive selling into the low, and then seeing the buyers come in, and also seeing a couple of a big market sales in that area as well that didn't really produce anything, and you got to think, like, if you're trading, unless you're really just low time frame scalping, are you looking for 6 points or 7 points on the NASDAQ? Like, come on, man. Maybe, but if you're banks, you're looking for 6 or 7 points, but you're trading 30 lots of NQ. Right. So but he trades differently than I do. But like for me, I'm not looking for 10 points. Like I'm looking for
handles,
a rotation. Yeah, I'm looking for, I'm scaling my first, little bit of my position around 20 points. And then ultimately I'm leaving a runner on for 100, and I'll be down to one contract after 50 or 60 points, but I'm scaling all along the way. So when you flip that around, those sellers, like, did they get the big move that they were hoping for? Right. Come on, man. No, they just got stuffed.
So you kind of mentioned using, I think you said it was a 512 tick chart.
That's right.
For looking at Delta, that I'm assuming that's Delta by candle. There's a couple other ways that I've looked at it before. I'll just get your thoughts on that. So one of them is, like you said, painting your candles different colors. I like that for looking for a driving, like one side participant, like trying to stuff one of those lows, but then looking to see the immediate reversal of that. Like to me, that's an indication of that guy saying, "Oh, fuck that! No, I don't want this anymore. I'm getting the hell out of here."
Yeah,
there's that, and then there's another thing that I experimented around with, but I don't think I ever really had too much luck. Was trying to use points of Delta to look for places where I'd expect pullbacks to stop at or stall at. Thinking like if we've got a block, I trade ES, so if I got a block like a 2-point range where I've got 600 Delta, up to like 1,000, going through that 2 point range, and we're coming back up and retesting that,
Yep.
I'm thinking, hey, all these people that bought here, they're probably going to want to get out and at break even.
Mm-hmm. Yeah. So I would think that goes into the kind of the structural delta is the way I would phrase that.
Okay.
Which we can kick that around because everything we talked about so far with this trade example and the idea of delta has been really a narrow lens at candle
Yeah.
by candle. So when you're talking about like, oh, if we pull back to here and like a good if then statement for an entry,
Mm-hmm.
I like to look at delta from the last like 24 hours
Right.
for something like that.
Okay.
So the way I have my DOM set up is I'm looking at the delta from the last 24 hours, and then I'm looking at delta that's built in the last hour on the other side of my DOM. So
Okay.
I've got delta that's built in the last 24 on the left side, delta that's built in the last hour on the right side. And so I will at times, I'll more use them for inflection points instead of entries. But like the other day, I was using ES as a proxy because we had I don't remember the price, but I'm going to make it up for the example. Like,
you could probably guess 4160 to 4130, somewhere in that range.
I think it was like 4152, if I'm not mistaken. And there was a spot that was 4152, and there was a ton of delta one way or the other. I think it was positive delta.
Mm-hmm.
And so we were coming into the open. Again, if that's not the exact price, my apologies. But NQ was kind of in a weird spot where I didn't have anything great there. And on ES, both by looking at the TPO chart as well as looking at the delta chart, there was this alignment of this 4153, or maybe it was 4132. I don't remember. But what I remember is talking to the room and saying, hey, since NQ is kind of on where we're opening with regard to strong structural levels and things like that, I'm going to lean on ES as a proxy and how it deals and digests this really, really strong delta that it's presenting at this given price. And so then as ES was above that, I would be leaning more to the long side on NQ.
Okay.
And then as ES was below that, I was leaning more towards the short side, thinking of that same thing, that there's real exposure there. And so if we start to trail a little above that, are we going to start clipping some of those stops and kind of sliding higher? And then or vice versa, because delta's created at market, but for every buyer there's a seller. Right. So when you think about delta, there's exposure both ways.
Yes, and
there's exposure for the guy on the market side, there's exposure to the guy on the limit side. So you could, in theory, I like the context of was it negative delta or positive, but you could just look at delta as an inflection point with no directional bias. It's just a place of interest.
The absolute value, just the fact that there is delta created there is interesting.
Yeah. And so that's probably how I look at, like, quote unquote structural delta versus candle by candle, is going to be more through the lens of kind of pivotal spots. Banks is really good at that. Like he runs a 30-minute rolling delta profile, and he references the last 30 minutes to find his inflection points for like his if then statements. Like, if you're already in a trade and you're like, okay, if ES can blank, then blank. It's like, okay, I'm long from whatever 4150, and if we can get above 4153, then I can add to this trade, anticipating us sliding up. Or banks will abandon a trade if we get up to a delta, a real high a cluster of delta. If we get up there and start to like falter or struggle, he'll just start peeling off some of his size.
That makes sense,
because you don't want to be fully exposed there. I would say the other thing about structural delta, which is, I would say, would differentiate structural from like executional, because again, even with a delta spot like that, I would like to see something on the candle by candle basis to really give me the details of what's going on. But if on my hourly chart, I keep a rolling delta on my hourly chart of the last 2 days.
Okay.
and that is very helpful. A lot of times with delta, you'll see, like, a lot of times with structural delta, people will make a little bit of a mistake by thinking, okay, we've got a lot of negative delta at 13,385. So if we touch 13,385, I'm going to get long. Well, a lot of times what we do is we actually slide into that delta, churn it a little bit, and then either stop run reversal to go back up if you're trying to trade the off that, or we'll churn that delta for a little while, and all those transactions will trade places, and you'll see that negative delta begin to adjust or whatever.
So it's almost like you're using delta not as like a confirmation tool or an entry tool, but more for just another way to help you identify, is there a fight happening here?
Yeah.
Or do I expect a fight to happen here because I can see the blood from the last battle?
Yeah, 100%. When you're thinking of structural delta, yes. It's usually not like a stop on the dime reversal type thing.
Right.
But if you were to throw a 24-hour or a 2-day delta profile, so this is for people that aren't familiar, like a volume profile, which is on the right hand side of your chart. You can change that to look at delta, and then it'll show you a delta profile. And the delta profile will show you where at market activity has transacted over the last however long you want to look. And for me, on my hourly chart, it's the last 2 days. And so, like today, right now, like at 385, we have a lot of negative delta compared to the rest of the last 2 days movement. And that also lines up with the body close and open of the 1 hour candle, the 2 1 hour candles that kind of peaked below that. And so that's just contextually, like, that's good to know. Like, that's a spot that buyers would need to hold if we come back down there, because if not, then it tells you two things. One, that those sellers, either their stops have already been hit and they're gone, so that delta, it doesn't matter, or that those guys are going to reaffirm that when we get down there and sell the freak out of it. And if they do that, then we're getting on the other side of a big delta block, which again, they act as pivotal, right? So like they begin to get what they wanted. The one thing that I will say is like a little fuzzy to me, and just to be totally vulnerable and honest, is like I lean towards telling the story of delta holding stops, but or like people wanting to get out at break even. But I struggle to believe the story that someone is still holding a short that they sold at market at 13,385, and they're just almost 100 points off sides and still holding that, waiting to get out at break even.
I've wanted the same thing myself too, but I mean, I don't know. I guess there's some people who call their broker and say, "Hey, buy me 1,000 contracts of ES," and then they just hang up the phone.
Yeah, and you got to think like there's. You'd be silly to think that there's not institutional transactions that happen in the futures market. Obviously, we know that's true,
right?
And those are can be more price insensitive buyers and sellers, and so in some ways, there is something to that idea. But I think the biggest takeaway is just like where there's a lot of delta, there was a lot of interest.
Yes,
and if you can identify that either from a delta profile or candle by candle, that is. Or looking at delta on your DOM, and there's some cool features on Sierra charts is what I trade on, and there's some cool features with like you can have your daily delta on one side of your DOM, and then on the other side you could be looking at just delta from the last 5 minutes. And I like to look at it from the last hour, but you can adjust the time frame, and to the point of candle by candle, the time frame does affect it to some extent. So for me, I'm looking at it through candle by candle through two lenses. Just from trial and error, my trading style, my experience, I like to watch it through the 512 trade lens, so 512 trade chart. And then I like to look at it through like a 750 volume chart, which they usually tell a pretty similar story, but you get a little more granular view, in my opinion, from the 750 volume. So it just depends on the day type and how things are kind of going as to which one. But usually I have both of them kind of in view or one click away. So I'll watch 512 most often and reference the 750 when I'm like, oh, that didn't show anything on 512. I'll go over to 750 to see. And I'm like, oh, they actually, so like on today's low, when we went below whatever that was, the 76s, Like 512 trade just showed, so my candle bars are just gray unless they're colored by delta. So that showed a bunch of gray, a green, a bunch of gray, and then green out of the lows. Whereas the 750 volume, they both showed that super aggressive sell above 300, but then the 750 actually showed a few more less aggressive sell attempts, which was really nice
Okay.
for me to see and be able to have like, man, they're actually still trying a little bit, but they're running out of gas
You can
because
actually
they sold
see
it
this.
super hard.
You can
Yeah.
see the strength waning almost in real
Yeah.
time.
Yeah. Like, yeah, I'll send you a screenshot of that low just so you can compare the two. And if you want to put it in show notes or whatever, you
Yeah, I'll
can.
make sure that gets stuck in the web page one. I don't think it'll show up on
Yeah.
the if you're looking at it via your app like Spotify, but it'll definitely be on the website.
Yeah. Yeah. So the other way, so again, I would consider those structural versus executional. Structural delta, you could look at the last 24 hours and just go, where did we have the most delta?
Yeah.
I mean, that's something I'm sure that there's some benefit to. I just, I find my structural levels and my places I want to execute from a TPO chart, watching and tracking balance and value. That's been the most beneficial thing. And then once I have those zones, then I kind of confirm or negate based on some of the structural delta. So looking at delta, a delta profile, as well as in the trading environment, watching it candle by candle.
Mm-hmm.
So other ways people look at delta, I think people look at delta with cumulative
Yep.
delta for like a day or whatever. I feel like for me that is too obtuse of a measurement to be actionable.
I've tried watching it. I have it on my chart. I still look at it and reference it, but I have not figured out any way to make anything meaningful out of it.
Yeah, most people are looking for it. Most people that I've been aware of are looking at it to confirm something. So I'm long. I want to see cumulative delta moving up, or we're coming into a low and we're making new lows with price, and cumulative delta is actually not making new lows.
Okay, I can see that being interesting.
But to me, like, I mean, yeah, I just don't.
But you're gonna.
I've not back
What
tested that. I've never really felt like it was actionable.
problem with that, in my opinion, would be if you're watching the cumulative delta, then why not just watch it on the candle and you can see that positive delta is coming in at that low. Like you're gonna see the.
Yeah,
I
or
think you're
you
gonna
see
see
negative delta blow
yes.
in and get ran over.
I think you're going to see the information in a much more clear picture if you're using like a 512 tick chart like you mentioned, or looking at it on a.
Yep.
I like a 12 tick footprint on my charts.
Yeah. Yeah, I mean, for sure. Let's see, another way to kind of begin to interpret delta. So structural versus executional.
Mm-hmm.
And then, like I mentioned, most of the people in this, go back and listen to the other episodes of like Flary talking about stuff.
Yeah.
He has some interesting ways that he has derived delta with like a directional bias from like session to session and things like that.
Like the Leroy boxes.
Yeah, and I think there's some really cool stuff in that. I mean, I'm just not as smart as him when it comes to that kind of thing. So I don't. Yeah, I mean, that's not something I use every day, but there's definitely there's an R skew to the positive side with that kind of thing. But I'm sure he's done talks about it on y'all referenced it on the Back to the Futures or whatever. But that's a thing.
Oh, I'm sure he's covered it
Yeah,
at some point.
that's a thing. Another thing that I would say is, like, we mentioned this a little bit, but like developing delta.
Mm-hmm.
So the reason that I keep the delta, the hourly delta, and the last days, like the last 24 hours delta on my DOM is so that in the moment I can see absorption much more clearly.
Mm-hmm.
Not absorption that happened yesterday, but absorption that's happening right now.
Right.
Like I can read the time and sales, I can watch the tape. I mean, that's like, I built a chart called Visualize DOM to try to not have to watch the DOM anymore because I like looking at candlesticks. But
Right.
I keep that there because if I see negative delta coming in on my execution chart, I can glance right over at the DOM and know not just that it was positive 300 in the last candle, but that positive 300 or negative 300 is landing in a spot where over the last hour we've already got 1,000 delta hung up in a 5-point range. So then that gives me even more information to be able to tell a story. So I like to watch developing delta on like a bigger picture
Mm-hmm.
because you start to get an idea of absorption. And if you've tried to trade absorption, you know that like we absorb and then slide down a tick below it, and then those buyers come in at market, push it back up, and that's kind of what you want to see for confirmation there.
Well, it's almost like you need their stops to get knocked out so that way they can
Yep.
get angry and buy right back
Yep.
in.
Yep, you need to see that, or you see that like retail traders. I mean, obviously, I'm a retail trader, I guess technically, but retail traders with super tight stops. You know, you're trading NQ with a 4-point stop, like probably going to get hammered on every wiggly move that happens. But people try to do that. Oh, we just put in a bunch of positive delta, or a bunch of negative delta into the lows. That's getting absorbed. Pull the trigger right now. Tight stop. Stop it till swing low. Well, if you did that today, you got stopped out, and then it ran 100 points from there.
Now that you mentioned that, I've tried using delta blocks like I mentioned earlier for like informing where to trail my stops, and it always seems like those are good ad points that I get taken out at.
Yeah. I mean, that's the thing.
And I think that it makes sense what you're saying.
Yep.
Yeah, the little slip through it, and then it goes.
Yeah, it's like when you're somebody tosses you something, you're like bobble it in your hands trying to catch it, and then you take your hands off and just reach lower and grab it. You know, that's the way I think of it.
Okay,
like they're fumbling the low, and then they whoop, we're gonna grab that.
Scoop and run.
And I do also think that delta for me, I would be careful if as you think about it, you think, oh, this is how I'll catch the low, or this is how I'll catch the high. Yes, that is probably part of it, but you don't have to have delta for a low or a high. For the low of the day or the high of the day, it does not have to be some giant delta iceberg situation. You can't just have a low without it.
No, normally you want excess, don't you?
Yeah. I mean,
like a completed auction that's indicating that they're done here.
Yeah, so you have to watch out for being pushed to be like a real contrarian with delta, which is the balance, right? Because I like to take my entries in areas of interest when somebody makes a mistake. When I see the mistake happen, what I perceive as a mistake based on my narrative, like today into the 70s, fumble, mistake, capitalize on that.
Right.
I have to be careful that I don't always approach the market like that, which is why I'm such an advocate for the 30-second opening range as being your first and most primary level in the first 15 minutes of the day. Like that first 30 seconds is my first level, and then from there the proximity to other levels gives me my direction as to am I gonna take the OR long, short, whatever, or am I gonna wait till we get to a level? And so today, since my first spot was 40 points below the OR, I didn't want to deal with getting only 1.5 sets of scales off or 2 sets of scales off. I wanted to be ready and fresh decision wise to make a good decision when we got to that spot. Now, I made a couple of long trades before that off of delta and large volume orders that happened and got 2 sets of scales off, and they were easy long side trades. And then the real cream of the crop type trade came a little bit later in the day, which is annoying because I like to be done pretty quick. And so I had to sit around and wait for it. We were joking in the chat today. You would have got a kick out of it, but about
I was on timeout today.
about the market giving us they did the opposite of giving us a raise. They gave us a pay cut.
Right.
Because we're having to wait longer for good setup. So
right.
But yeah, I just would say be careful trying to be a contrarian and using delta as the thing to do that. Like, there's some real R skew in the OR directional trade when you give it enough room and you don't take profit too quickly. And so I just wanted to say that as like a PSA because what you could infer from this conversation is BabaYaga is buying every low and selling every high, and that's not the case. You've been around enough to know I'm not doing that at least anymore.
Right.
I will say that in my other podcast we did with you guys when we talked through trading and stuff, one of the things that had to change for me to become consistently profitable was I had to get over the ego of being the guy that bought the low and sold the high. Because what I realized is that worked great like for 10 days or 20 days, and then we had a trend day, and that would take that would take all my profit back because I would be
Trying to
selling
catch it.
every peekaboo high, trying to
Yep.
catch this rocket ship or buy a falling knife. And so I had to kind of retool my approach, because think about it logically. If I can make money, lose it all in one day, then my strategy or my cerebral approach isn't nearly as good as I thought, because that one day should be the day I make a
Right.
whole bunch of money,
Right.
and the other days I just make a little bit. And so that was when I really started to see some consistent profitability, trading from where the market opens out to these spots, making buyers push me out of a short 50, 60, 70 points lower.
Mm-hmm.
Or if I have a level 100 points lower, well, I'm going to trade short off the OR down to that level. That's okay. But if it's inside of 50 points, probably not. But if it's that far down, then yeah, let's not just sit on our hands and wait to get into that. And then if it's wrong, then what do? You shot your one shot. That was your trade thesis. And then they blow through it. And then you have the peril of, well, I can't short when we're this far down, or I can't long when we're this far up.
Right.
So I just say all that as a caution. Like, don't use Delta to fade strong market and think that it has like my stamp of approval. Like, that's not how I apply it. It has to be, for me, around an area of significant interest, and then it can be a confirming tool to that story, or it can negate that story. It can also be a confirming tool for places to add, places to take profit, that kind of thing. But I just don't want to think that this conversation sets off a bunch of people into, let me fade the tips of the market using Delta, because that's not going to work out well for you.
Friends, family, and loved ones, I bet you haven't purchased a Father's Day gift yet, have you? Not to fear, the leaders in below-the-waist grooming are here. I'm talking about our friends at Manscaped. They're saving the day yet again with the total package for father figure in your life this year. It's time to upgrade his game from waist to face with this exclusive offer. Have him join the 8 million men worldwide who trust Manscaped and get 20% off and free shipping with the code 2bulls at manscaped.com. I'm supposed to tell a funny manscaping story or talk about how hairy my dad is, but I'm really not that close with my father. He does like a good beard trimmer, though. But for those of you who are familiar with your father's grooming routines, or lack thereof, then you can start with the ultimate Father's Day MVP, the Performance Package 4.0. Inside this package, he'll find their signature Lawnmower 4.0 trimmer, the brand new Weed Whacker 2.0 ear and nose hair trimmer, Crop Preserver, Ball Deodorant, Crop Reviver, Toner, and Performance Boxer Briefs, and a travel bag to hold all of his goodies. And we can't forget about the moneymaker. Manscaped has absolutely changed the game with their new Beard Hedger Pro Kit for fathers around the world. Included is the Beard Hedger Trimmer, Beard Shampoo and Conditioner, Beard Oil, Beard Balm, and 2 free gifts with their signature beard comb and scissors. This is the perfect gift for those of us who have had a normal childhood. And we all know dads love comfort. If his grooming routine is already dialed in, make sure to hook him up with Manscaped's Boxers 2.0. These are without a doubt the best boxers for men of all ages, and it's sure to give you that awkward moment we all love when your dad sees you bought him underwear for Father's Day. So whether he's mowing the lawn, taking out the trash, or golfing in the sun, these moisture-wicking boxers breathe without breaking a sweat. So get 20% off and free shipping with code 2bulls at manscaped.com. It's 20% off with free shipping at manscaped.com and use code 2bulls. Make this Father's Day one you won't forget with manscaped.com.
With Vroom, you can shop thousands of cars right from your phone and have your next ride delivered straight to you. Between work, family, and making time for yourself, purchasing a new car can feel like an impossible task. Vroom gives you the flexibility needed to check their wide selection of vehicles and leisurely make your purchase. You'll also never have to negotiate the price of a car, so you know you're getting a good deal. After purchasing your vehicle with Vroom, you'll have a full week, or 250 miles, whichever comes first, to ensure your new ride is right for you. Plus, all cars on Vroom.com come with a 90-day limited warranty and 1 year of nationwide roadside assistance, giving you peace of mind while on the road. You can buy a car from Vroom entirely online. So next time you need to buy a car, just grab your phone, go to Vroom.com, and check out thousands of cars.
Are you struggling to lose weight and keep it off? Tired of wasting time and money on starvation diets that lead to more frustration and stress? If there was a weight loss solution that could actually work for you, would you try it? Then head to Golo.com.
I'm Steve. I lost 138 pounds in 9 months on Golo.
I'm Amber. I've lost 128 pounds with Golo Taking Release.
If you're ready to take back control of your life, head to Golo.com now and see how Golo can work for you. That's GOLO.com.
My sleep is way better. My inflammation has gone way down. Golo saved my life. I was way overweight. That's what sent me down the path. I wanted to make sure and live for my kid.
I have literally tried everything. I was on the verge of getting gastric bypass surgery, and I saw the Golo commercial, and it was the last thing I tried because it worked.
Join over 2 million people who have found a better way to lose weight with Golo. Your healthier and happier life begins at Golo.com. That's GOLO.com. Again, GOLO.com.
So I actually had another question I wanted to ask. And then,
hit me with it.
well, this kind of just goes back to what we're talking about with market selling versus passive buying. Like why is the person who's market selling more important than the person who's passively buying? That's one thing I always struggle, I think, to wrap my head around. Is it just because the emotional component behind like who's placing the orders, or is there something more to it than that?
Well, I think that plays a part in it. I think generally, that large market participants are on the limit side of most of the transactions they do.
Mm-hmm.
How are you going to fill 250 lots? You're not going to do that at market. If you do,
sometimes
then
they do.
Yeah, sometimes they do, which is another little thing, which is large volume trades that I think everybody should be tracking as well. Which, if we have time, we can hit on that with the apply. But for me, it comes down to who is crossing the line, right? So if you sell at market, you're crossing the line. I don't do a ton of my business at market, and I'm not a huge player. I do some of it, but I try not to do I don't try to do all of it at market. I try to do some of it at market, most of it at limit. So you think of like patience comes into play a little bit or into the conversation, and then impulse. Like it's hard to be an impulsive trader if you're always trading at limit.
Yeah.
So when I'm looking at Delta and it getting created, and I know that it's the product of at market orders, then if it comes in a spot that I think is real vulnerable, that's why I lean heavier on that idea. I think at market is probably most of your less conviction type traders, breakout and breakdown traders. I feel like breakout and breakdown traders probably generally struggle to maintain consistent profitability.
Mm-hmm.
And I think that breakout breakdown kind of thing goes hand in hand with Delta, where it usually is showing up. And so I think the limit trader is probably a more patient, decisive, has a plan, bigger, less price sensitive. And I think your at market participants tend to be a little more price sensitive. And so that's why I don't even want to say this out loud, but a lot of times Delta gives me that confirmation to fade something potentially, or it confirms it. Like we leave OR with a bunch of strong buy Delta, and I don't have a level above OR for 100 points or 70 points. Well, I mean that tells me that people are going the way I want to go. So let's go.
Right. It's almost like you're waiting to see which way the bus is going before you jump on.
Yeah, dude, and I really think like even today, right? Like when we had the news come in at 8:30, we had already kind of pre-popped from the news from 8 o'clock, and we'd ran up, from 400s up to like 460s, and then we had a string of real aggressive buying, both that created Delta and large market orders, but again, it kind of tells the story, right? There was enough limit side participants passively soaking all of that they just walked price all the way down. We didn't trade a tick above OR, which is what made me extremely careful for the long side trade, because one of the hallmarks of a trend day is no tick above the OR. I don't try to act smarter than the market, but today was one day where in the room I said, hey, this is no tick above the OR, but there's a strong opportunity just a little bit lower. So I'm not trading to the short side. I'm waiting for that trade, but I'm going to be careful, nimble, and whatever. But this is a scenario where a lot of retail is probably overly short and overly aggressively selling, and we could see a real unwind against that
Mm-hmm.
because we had all the hallmarks post open of trend day down. And so, but again, it's like playing chess, right? Like there was this opportunity to expose. When someone became exposed, there was an opportunity to jump on and fade that, and I think that flipped the whole narrative for the day. And I think that most people were probably trying to sell this down and thinking we're going to roll right back down, but they overlooked that top of balance spot and kind of got hung up.
I feel like they've been trying to sell this thing back down for the last month.
Yeah, that's true. I mean, for some reason I get frustrated with the sell side when I'm on it.
Yeah.
Sometimes, like, although my largest trade to date was a sell side trade. Well, I take that back. My largest trade to date was a Bitcoin trade from a long time ago, but that was a long trade for sure because that was like in 2000 whatever when Bitcoin was just going moon. But in equities, my largest trade has been a sell side trade. But I get frustrated when the sellers fumble it, man. Like just even in this bear market, it's
especially when you had it. You had it,
man. You freaking had it, and you can see that I can see they had it because of the level and because of Delta, and then they just get too excited and blow their load, and you're screwed.
Yeah.
If you're trying to roll with them. So
okay.
But that was a long answer to your question. But I think limit side market participants are less price sensitive, and at market participants are more price sensitive, and probably have brackets playing, and probably have stops that are just above a local swing high, and like that kind of narrative starts to play in my mind when I see this stuff come in.
That makes a lot of sense, actually. Now that you mentioned that, especially the stop portion, yeah.
Yeah, and velocity of that move too. Like velocity of the moves plays a huge role. Like the market, you have to ask yourself, not you, but like your general person, like ask yourself, what type of behavior does the market tend to reward?
Mm-hmm. Impulsive, emotional decisions, right?
Yeah, no, not at all, right? It seems to reward, from my experience, that methodical, consistent approach to identifying key areas, and then an opportunistic approach to your execution tools. And that's what Delta kind of helps me with, right? Helps me see those opportunistic opportunities around a key area of interest. So, yeah.
All right. Well, do we have any other apply that you want to cover before we start diving into some of these questions? Because I think some of these are actually going to cover some of the points I see on your notes here.
Yeah. I would say that we just covered it a little bit with the emotional thing, but Delta pulls the veil back on the emotions of what a trader is, at least the way I infer it, what traders are thinking.
That makes sense.
Yeah. And so, again, not to like harp on it, but like a real high velocity move into a low that kind of stalls, you get a bunch of negative Delta, you got a bunch of market participants firing off sizable orders, and we're just moving 6 points. And then we rebid that move. Like those are the things that you look back at the chart, if it's blank, and you think, how would you have known that was a good opportunity? And so a lot of the way that I look at the market has come from that simple exercise.
Think of it as one person and put yourself in the emotional state that they're in.
Yeah. And think what, if you're trying to think of strategy for like what tools help me get long, what tools help me get short, what tools help identify key levels, find a spot you think you wish you would have had. I hate to say it, sounds crass. When I really crossed the threshold, one of the earlier thresholds of like a trading breakthrough years ago, I looked at a blank chart, nothing on it, and I thought, where did I wish I would have bought? So I started identifying some spots. Where do I wish I would have added? Well, I wish I would have known how to add, why I could have added there. And then I messed around with time frames and tried to figure out what presented an opportunity from just a candle to candle basis. And then I just started adding things that gave context to that, to the chart as a whole. And then tried to see what things started to line up with those. Maybe you don't buy those swing low, but when the market rebids that, well, it sounds crazy, but like you could have bought 364 with a stop at 360 today,
Yeah.
Well, why? Well, we rebid the low and we had really strong positive delta up out of a spot that was slightly below a place where we had a ton of negative delta and no one had follow through. Like, so I say that to say, like, taking something like this, having a blank chart, or even just identifying your areas of interest that how you would normally go about it, and then put this on there and see if you get some stuff firing off in areas that you already have interest. Don't throw this on there and buy every time there's buy delta and sell every time there's sell delta. So yeah, contextualize that delta and watch for, like you said, that emotional piece of like, it's you versus one other person and they're on the other side of all of this.
So that actually sounds like some really good homework then. So the homework would be to take a blank chart, pick the points that you wish you would have had a trade on, and then go back and look and see what delta was doing at those points. And do that.
Yeah, dude.
Just
Heck
do that
yeah.
until you start seeing some commonalities.
Yeah, I mean, and again, it's not magic, right? But like
pattern recognition, right?
Yeah, it's pattern recognition. And also, like, I would just, how do you know if a sell candle had any juice behind it, or a buy candle really had any juice behind it? Like, if the market moved up, yeah, but if the market moved up on really strong delta, well, that tells you a little more information. So it's again, it's like, let's get, I kind of, like, let's get inside the candle.
Yeah.
Because if you were really, 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 really good at reading the DOM and somehow had a photographic style memory, you see all of, like, that's why really solid DOM traders are like really OG old school traders. They watch the DOM play out and they like see this, like they see it in the time and sales and they see it in the DOM.
Right.
I just, it's hard for me to pick up on all of that nuance just watching the DOM. And so that's why this candle to candle basis kind of helps tell that story. So it's not magic. I mean, it's just watching the flow of orders come into the market and ascertaining, some potential directional bias and where somebody's exposed and what would it look like for the market for you to capitalize on that in the market, that potential exposure.
Yep.
Not right every time. I take stops. I have red days. I'm a normal dude, but this is a good tool, and I think that's a great homework, dude.
All right, let's make that the homework then.
Yeah, let's do it. Done.
All right, we got 2 minutes left before we hit the hour mark, which we can go a little over. Let's
let's hit some questions.
Yeah. All right. So Final Devil asked this question about delta in, delta out.
Okay.
He wants to know how you can tell if it's genuine or just a reaction, like short covering or people closing their positions before a continuation move.
Yeah, I would say location. So I don't know exactly what he means. I know what he probably means by delta in, delta out. But...
So okay, I think I can give you kind of an example. Like you have a really strong move with a lot of negative delta, like say a big sell candle pushes down, and then suddenly you start seeing a lot of buying come in. Is that buying, like, how can you tell if that buying is those people exiting their positions or are they, are people coming in trying to support this? Because there's two different things, right? If people are buying this aggressively because they want it, that's one thing. If it's people selling or covering their trades,
covering the short, they just,
that's another thing. Like how can you infer the difference?
Yeah, I mean, that's a really good question. I think there's obviously watching it a lot is one thing. For me, again, delta in no man's land is not executional. So like a large volume trade in no man's land is more executional than a standalone delta candle in no man's land. And when I say no man's land, I just mean in the middle of, like, you don't have a level, there's not a key zone. You weren't looking at that before the market opened that day, and then you get some crazy delta pop in. It's like, okay, so, I mean, someone was interested, but if it doesn't align with your plan, then it's kind of out. When you think of like delta into an area, delta out, then if it's a peak below a swing, that's going to be stronger than if it's like if we're grinding up, we get some real positive delta, then we get some negative delta. Like that could just be some buyers from before covering, and that didn't make a new swing low. That wasn't into a swing high. I wouldn't really put much weight on that. Wait for that to be reoffered. If we push up there and you start to see negative delta come back in, or you start to see, even like you start to see positive delta build on your so negative delta candle by candle, or if you see like absorption coming in from the watching delta like a on your DOM, then that gives a little, like, again, you wait a little bit and you get a little more context. I would be very hesitant to fire off a trade just because in a random place we had delta in, delta out. So I think how to tell if it's genuine is probably more around where it's placed. And
Yeah.
then if they rebid it or reoffer it, which sounds like a cop out, because like, well, how do we know if when it pulls back they're going to rebid it?
Well,
You
here's
have to kind of watch it.
another way I maybe look at that too is like if it's a big block of sell delta that's getting wiped out by buy delta, is the buy delta happening above the sell or is it happening below the sell? Like if it's well below, then yeah, it's probably a good chance that that's people, closing out their positions.
Yeah.
If they're getting run over, then yeah, that should be pretty obvious that uh, that's people exiting and getting chased out.
Yeah, so I did some back testing on delta. So if you look at delta per candle, and you say you take any delta in a 512 trade candle, any delta above 200 positive or 200 negative, when you have an area, let's say that you get negative delta followed in the next immediate candle, so negative 200 delta in the next immediate candle followed by positive 200, you would think that that would be a great time to just scalp a trade and go for it.
Yep.
But I will say that over the long haul, that is not a profitable strategy because, again, the location of that is what is hard to quantify.
Right.
And so you need to be able to quantify a little bit more context than just a simple sequence of delta coming in and delta coming out, either to the buy and sell or sell and buy. What I do find is that if you have, let's say, a really high amount of delta followed by a mediocre amount of opposing delta, that actually seems to be more, as far as back testing, that is a little more profitable if you just blindly take it. Still not a great strategy for long-term success, but it doesn't take as much work to run it back against those stops as you would think.
I think the key point that you're making here is that any one tool is going to be kind of useless on its own.
Yep.
It's when you start having multiple ones firing and telling you the same story.
Yeah.
Confluence of information.
Yeah, but I think that's sufficiently gets him looking in the right way. How to look at it for sure.
Yep. I think you might have already answered Purdue's question, but maybe you can give the short version. The various ways you're looking at delta or your preferred way, even footprint, cumulative, timeframes, etc.
Yeah, time frames and volume. So 512 trade, I look at that. I look at 750 volume, and I'm again looking at the candle by candle delta with regard to that. I don't really look at cumulative delta, and I reference footprint charts for like continuation stuff, where you're going to pick up on a zone that's being absorbed, where you're not going to see that candle by candle necessarily. Excuse me. Or when I'm watching the DOM. Watching the DOM and watching for absorption as for continuation or for an ad. But for execution, almost exclusively, I'm looking for have an area of interest, and then I have tools confirming, and that is tools confirming being delta. It's not the only. I mean, let me say for clarity, it's not the only thing I'm looking at, but
right. Which of those is your favorite though?
512 by far.
Yep. Gotcha. By far.
Now,
even.
I will say, curveball. 15-second delta is super fun.
Really?
Yeah. With the same parameters. For sake of just clarity, plus 100 or minus 100, plus 200 minus 200, plus 300 minus 300. Those are the three like thresholds that I use in like my color bar alert that I have, and I pay most attention to plus 200. Minus 200 and plus 300 minus 300. Once you take it down to a 15-second chart, and in 15 seconds, if you get minus 300 or plus 300, it can be a cool, very, very detailed story that's starting to get told.
Sounds like you're just catching the really big trades then at that point, right?
Yep. Yeah, you're catching like when someone really fumbles it in a tight time frame. So.
All right. Let's see. Gildan75 asks, constant volume bars, pros and cons, and a good volume to start with.
If you're going to do volume, I think 750. I would start there. for NQ, and then for ESGs, man, probably at least double that, probably 1,500.
Yeah, that seems reasonable.
Yep.
Pros and cons of the bars?
Pros and cons of volume. I'd say the pros of volume is you can see how much volume is taken to move.
Okay.
How much volume, if your volume bar is really small versus a volume bar being really big, then it didn't take a lot of volume to push that.
Yeah.
So really low volume into a low, can look like the beginnings of excess or taper. A big volume candle. We just blew the lid off, by the way, on NQ. They just busted a bunch of stops. Sorry. A candle that's really tight and small with a lot of delta and volume can show you like iceberg type activity. But for that, it sounds like as you're just getting started, I would say take 750 volume, throw it on NQ, look at it with no delta on it, just to get an idea of how the chart starts to play out with looking at that volume, and then start to add a threshold on delta. And to do that, it's really simple. There's a study that shows a bid-ask differential, and it's almost like an oscillator. And you can use that because it does have the labels like plus 100, plus 200, plus 300, and it's like in portion 2 of your screen on Sierra Charts.
Yeah.
And then from that, you can literally go to Sierra Charts board, which I know is a terrifying thing, and search for how to do color bar alerts over a threshold, and then just point that color bar alert at that study that's showing you the delta that's happening, and that's how you would start to paint the bars. It's pretty easy. It's just greater than or equal to, less than or equal to.
So, if you have any trouble trying to set that up, Gildan, just throw a post in the Discord. We'll make sure we get you sorted out.
Yeah, dude, send me a message.
Yeah.
BabaYaga on Discord. You don't have to be a friend to message me. I'll send you a chart book with the color bar alerts on there. I don't care. Yeah, I'd love to help somebody with that.
Okay, Joel has 3 questions on here, which he generally does.
Joel.
He does that a lot.
Love him. Freaking love that guy.
I think we have answered the first 2. So the last one was when you started to touch on the large market sweeps. I think that's probably the good one to spend our time on here. So what can you infer from them?
So I assume large market sweeps. Would you think he's referencing
somebody who's dumping a big order, market sell, market buy?
Yeah. So I referenced this earlier, and we've done so good on time. We're just a few minutes over.
This is amazing.
And I'm so thankful that we've talked twice before this, so that we could be a little more concise.
Right.
So I appreciate that. But so large market sweeps are, I really watch them a lot, dude. And what I'm looking for, and so Joel, if this makes sense to you, great. If not, dude, let's get on a call or in screen share and we can talk through it. I'm so down for that. It's not even funny.
You guys should make a video.
Yeah, we can make a video. I'd love to do that. But if you didn't want to do a video, I'd just do it just to do it.
Joel do a video.
Yeah. So large market sweeps, what I'm looking at is for the NQ, for whatever reason, this is just anecdotal, me watching it. It seems like any orders larger than 19 seem to have the potential for some implication. Like they seem to matter a little bit. Like it seems like under 19 contracts, you can fly under the radar. Over 19 contracts, it seems like you get picked up. Okay. So sweeps that happen. So if you see large market orders into swing highs that are within the reasonable realm of a zone that you would want to short, and you see sweeping buy happening that then pulls immediately back, and is met by a large market sell of some similar size, so 19 orders or greater, that's kind of the same thing as delta in, delta out, but for large trades, right? And again, context is key, but just think of the story that tells. I just sold 20, we moved down 2 points, and then someone just bought 20, either that trader or someone else.
Yeah.
Right? And think about I don't trade huge size, sometimes by accident. I think very early on in Delta, I was like, oh God, guys. I was in 3 times my position size by accident because I was or actually, I guess it was 10 times my size.
Yeah, I've done that.
I was trading NQ instead of MNQ, and I was like, "Jeez, my P&L is moving fast." But think about that. Like you throw on 20, market sell, we move just a little bit, and then someone market buys right back in your face. A swing high where we market buy 20, 30 lots, it sneaks the bid up, it sneaks through some of the liquidity on the offer side, maybe 3 points, comes right back down. You have a wick, but not just a wick, you have a wick with a story because someone bought the piss out of the top of that wick. And then someone turns around and sells it on them. And then Delta follows through, and you see Delta confirming that move away. So, see, Delta's not always something you fade. You see Delta, that guy got abandoned. Like, his boys did not come through for him.
Right.
So I use large market sweeps to infer. Most of the time, I'm fading those. And most of the time, I am fading those because that's impulsive activity, and the market does not generally reward impulsive activity.
What about if you see like I'm trying to think of a size that would make sense. So say 100 lot order sweeps through NQ, market sell at a level that you like. It drops, say 4 or 5 points, then comes right back up, and he hits it again. Now what?
Okay, so we should have talked about this. We should have mentioned this. All of these numbers, these thresholds, and these market order sizes do not apply to contract roll. Okay.
Oh, okay.
God, and that is the very, and we're at the end of the podcast. Jesus Christ, make that the banner for this.
Yeah.
Contract roll is the only time that the Delta, this stuff weird stuff happens. Like Anthony Crudele talks about that. Pax talks about that. Like market roll or contract roll is it's people have to do business there. They're not choosing to.
Yeah.
So just every bit of this is with the asterisk, not when we're rolling contracts. Okay. But if you see that 100 lots on NQ is enough to start a trend day.
Mm-hmm.
It literally, it's enough to start trend type activity in the opposite direction or in the continuing direction. So if I saw that come in, I would go to my little button and go extended rectangle, and I would draw a rectangle around that price, and I would extend it into the future, and I would watch as we interacted with it, and I would watch for the continuation and Delta to confirm that guy was right, or I would watch for Delta and other market orders to negate that guy being right. Most of the time, though, an order that size, if they don't get followed through immediately, they're going to get ran through by 10, 15 points just by the nature of the market.
Right. I'm sure some people start salivating when they see that. You see somebody get stuck for a lot. Yeah,
man. And again, though, that's one of the few things that if it happens in no man's land, it can entice me into a trade because of the amount of exposure and potential that's there. But I'll tell you this. So note this, audience, and Joel and whoever listens to this.
Hi, Mom.
Do what?
I said, hi, Mom.
Yeah, Mom, hey. So think about, like, this is where the large sweeps or large market orders can be super helpful. And I love it when they happen like this. Okay, let's say we open, we get above the OR, we pull back to OR high, and you get the day it was 127. I'll never forget it because it was a really good day for me. We pulled back to OR high. I was in a trade. We had a market seller sell 127 into OR high, and price, we did not move. Someone on the limit side absorbed every bit of that. We trended like 250 points up that day on the NQ. I got long as soon as I saw that order hit at opening range high, because like what a fool! Like that's not where you do that kind of business, bro. Conversely, if we're below OR and we're coming back up to OR, and you see someone try really hard to get us back into OR by executing like 100 lot order, and we don't move and we don't get inside of OR, what was that guy trying to do? He was trying to push us back into OR. He was trying to push through the liquidity into stops. Well, that didn't happen. Fade that guy. I fade that guy. So that's two scenarios. Into a swing low, massive market sell order. I mean, be real careful following that guy. I mean, now if we move 15 points below that, come back and reoffer it, then join the party. He was right.
Right.
But again, location is key. But dude, I'm telling you,
location and reaction. Right?
Yeah, everybody in the room though, they know I will immediately be like, oh baby, like when If I'm in a long and some market buyer slaps it for like 30 lots into the swing high, I'm like, come on, man, don't do us like that. Because like that's the kind of activity that the market doesn't reward. And so we rotate back off that oftentimes.
Mhm.
Now, if you look at today, like we saw that today, like into the first real push above the OR up to like 60. It was like big market buy, 20 lot market buy, 20 lot market buy, 20 lot market buy. Buyers were having to work real hard. They tried to save it multiple times, and then sellers stepped in like a bunch of bosses from 448 down to 440, and they sold us off from there all the way down to 400.
Like a big
Right?
dick in a locker room.
Yeah, dude. Like, look, I'll send you the screenshot. But like, when you see this, like, if you were trying to garner a position in this, like, if you were trying to follow those large market buys, like, that would have been a tough thing to do, because those guys were wrong for the intermediate time frame. But if you were long from much lower, I hated to see that happen. And actually, to be quite honest, I was at lunch with that other trader when that happened, so I was like, I didn't see it happen. But if I'd have seen that happen, I would have probably been a little tempted to go ahead and close the runner, because that's just very unproductive. So you think of like, who's being productive, who's not being productive, who's really exposed, who's not exposed, who's making like wise choices that are patient and cerebral and studly, and who is being an idiot,
Mm-hmm. Mm-hmm.
And then like, you don't want to trade with the idiots, man. You don't want to trade with the idiots, bro.
Yeah. Ah, fucking A. All right. Well,
We killed it.
I think we did it, dude. We did it.
Dude,
We
finish
made it.
line, the ribbon just broke across my chest. Where's my Miller Lite? Isn't
Right.
that what you get after a race?
That's not what I'm getting.
You know
No,
what I'm
but
saying, though.
I'm gonna have to rework the outro on the fly here. So yeah, we are out of time. We don't have more to discuss because we actually did it. So I guess we'll be back soon with some other episode other than part 2. But in the meantime, if you want to help us out, share this with anybody out there you think that's looking to get better at trading futures, and take care. Want to say goodbye?
Oh, yeah, I do want to say goodbye. Guys, love you, mean it. Even if you're not in our Discord, I'm still available. I want to resource. I want to see traders succeed. I have a real passion for it. So hit me up, BabaYaga on Discord. For reference, BabaYaga 1222. That's my number.
Yeah.
BabaYaga number 1222.
You know that's going away, right?
Oh, it is?
Yeah, you didn't get that message?
No.
Discord's changing everyone to unique usernames and getting rid of the 4-digit identifier.
Well, they better not take BabaYaga away from me. I've had it for a long time.
If you've had it, the longer you've been on Discord, the quicker you get to pick your username. So they're doing it based on.
I've been on since 2017.
They're doing it based on seniority.
Dang. Okay. Well, for right now, it's Baba_Yaga number 1222. And if you got questions about this, I really mean it. I will answer them. I will answer you. I will get on a call. I will help you out. Hit me up on Twitter, BabaYaga on Twitter. I'm down. Like, I want to see people do well, and I think Kyle could confirm that. Like, I'm not lying. I'm so down. Like, I'd love to help you if something didn't make sense. Hit me up. I'd love to be helpful.
All right, guys. Have a good one.
Later.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.